Welcome to Infiniti Investment Solutions. It's Brendan here again, and once again, sitting in traffic. So what else do you do when you're in traffic but make videos? I gotta love it. I either listen to books or make videos, or make my phone calls, strangely enough. If I've got to phone clients back, or I've got to follow up with somebody, or I've got to have a team meeting, I try and do it in the car, and have all the conversations I need to have. And this morning, I don't have too many conversations to have with anybody else, so I'm having it with you. So here's some of the thoughts that I was having is how did we come to having a goal of $1 billion portfolio? I mean, it's a very big number. Why do we want to do it? And how did I get to my thinking that it's even possible? So some of it is really a case of my belief system is so strong that investing in the USA, in USA real estate, is the best thing for my family, for my wealth, my global financial freedom, for my financial protection, that I'm literally all in on the US. So if I spend the next 20 to 30 years of my life building a $1 billion portfolio, that's what I'm going to do, because it is the best thing that I can do for my family. It's the best thing I can do for my community. It's the best thing that I've found to help other people achieve the same results that I'm achieving in my life at the moment. And it's also where I can add significant value by helping other people do exactly what I'm doing. So getting people to come in alongside me and buy properties with me that I believe in, that I'm putting my own money in, that I'm generating cash flow from. And ultimately, if we can help other people become financially free, then they're suddenly free to do whatever they want to do to make this world a better place. So if I can do that one thing and help somebody buy back their time and replace their salary or replace their income with US dollars based in real estate, so we know it's dependable, we know it's going to be around for the next 20 to 30 years. And I'm talking real estate that is economically resilient, guys. I'm not talking about the stuff that got wiped out in 2008, 2009, which, to be fair, in 2010, I was buying all day long. We helped people buy over 400 homes in America after the subprime crisis. So once I started buying and I had my conviction on how amazing it was and how it changed my life, the conviction that I'd built through seeing the actual results of buying property in America at a ridiculous discount really, really paid dividends. And we helped my clients buy around 400 homes over about 2.5, 3 years. So it's not that I don't believe in single family homes, but what happens is it gets to a certain scale where it becomes very, very, very difficult to manage. Managing single family homes that are spread out across hundreds and hundreds of miles is a difficult task, and you need very good quality managers, but it's also very expensive. So typically on a single family home, the managers were charging anywhere between 8 and 10% of the revenue as their management fee. Whereas when I'm buying a 300 unit apartment complex in Tennessee or wherever we're currently looking at these types of deals, typically the management company is coming in at like 3.5%. So I can save significantly on the management costs and make it easier to have everything in one place. Have a building with 300 units instead of 300 single family homes spread out all over the country. But anyway, to come back to my thinking around the goal is, I decided to make it my life purpose to help other people get financial freedom. And in order to do that, I've got to have an audacious goal. I've got to have something that's unreasonable, that is so big that it almost breaks my brain. And $1 billion is kind of at that level where, I'm definitely not a billionaire just yet, but it's something that's big enough that if I am aspiring towards $1 billion, it's worth my time and the piece of my life that I'm going to give to this goal, and the meaning that I'm going to put behind it, because it's so big, it's so audacious that it also inspires other people to come in alongside me. They start saying, well, geez, okay, he's got $1 billion goal. Well, how close is he to it? And we're like 13, 14% of the way there. We're at $134 million already under management, which is, a mind-blowing number on its own. A small team that can put that together in a relatively short amount of time is pretty incredible, and I'm really, really proud of my team to do it. I didn't do it alone. I didn't go out and buy $134 million of property. We did it together. We did it with my partners. We did it with all the investor partners that came on board. We did it through our relationships. We did it with great American partners that are really putting their money where their mouth is. Literally, they're putting physical cash in the deals, and they're also delivering in terms of managing the projects out and making sure that they actually come to life and produce money for all of our investors. So it's not a goal that is going to be achieved without help. It's not a goal that's going to be achieved without people. It's not a goal that's going to be achieved without everybody becoming inspired by the goal, inspired by the purpose, inspired by what it means to them and the value it adds to their life. So it's not an arbitrary goal. It's a goal that if we've bought $1 billion worth of property, I've probably helped 100 to 200 people become financially independent by doing that, or become globally financially free, or at least create some sort of dollar-based income. And some people might argue a little bit about where the dollar's going, what it's going to be in the next 10 to 15 years. Is cryptocurrency going to disrupt it? Is China going to disrupt it? Is Russia going to disrupt it? All I know is that right now it is still a global trade reserve currency, which means there's still massive demand for it. And because there's massive demand for it, backed up by US government with a very big military and some very big sticks in terms of economic sanctions and all the rest of the stuff that they're capable of, the US dollar still has a lot of power and will continue to have a lot of power for at least the next 5 to 10 years. So if that doesn't change, and I'm buying properties with a 10 to 20 year kind of window, I've got enough time to see what the markets are going to do. And then in order to lower my risk, there are some things that we do. So if we're looking at buying in South Africa, to lower my risk by fixing interest rates, I've got to pay 12, 13, 14% on a fixed rate. And then they don't fix it for a very long time because our interest rates are quite volatile and we end up paying a hell of a lot of money. How am I supposed to generate positive cash flow if I'm paying 14% interest? I've got to find a property that's got such ridiculous numbers. They're very difficult to find. Where you can get 15% sort of yields and take on a 14% interest rate and still have a little bit of positive cash flow depending on the size of the deposit that you put down. Whereas in the US, I'll give you an example. The property we're buying right now, it's in our final stages of due diligence. We've got the letter of intent out. We've negotiated the deal. They've got it under contract already, so we know we can get it. We're looking to close end of May. It's 101 units in Ohio. It's really exciting. It's a $12 million deal. We've got to put down $3.5 million, but we've been able to get finance at 4.66%, significantly lower than South Africa, fixed for 10 years on a 30-year amortization. So in South Africa, if you're buying commercial property or a block of flats or that type of stuff where it's deemed commercial, you're lucky if you're getting a 10 to 15 year loan. In the US, we've got a 30-year loan, and the interest rate at 4.66% is fixed for 10 years. So I know what I'm going to pay on my bond for 10 years. And it's significantly lower than I'm paying in South Africa. And the yields I'm getting are almost the same as South Africa. We're buying this at I think it's a 7 cap, somewhere around there. 6.5, 7, which is pretty similar to what you're able to buy here in South Africa. If you're buying normal entry-level townhouses, you're going to get a 6, 7, 8% kind of yield. That's what you're getting. So if I can buy property with the same yield, with less interest, that I can fix for 10 years on a 30-year amortization, and on top of that, they're giving me 4 years of interest-only period. 4 years that I only have to pay interest, which means my cash flow is going to be north of 10% per year if we're putting down a 30 to 35% deposit. And I think we're putting down in total 35% deposit, but that includes our renovation budget. So that means when I put down my deposit in South Africa, I've got no cash flow. If I put down my deposit in the US, I have positive cash flow of 10% per year or more. Why would I continue buying South Africa? It doesn't make any sense. Logically, I'd rather have cheaper money. I'd rather be able to lower my risk by knowing what I'm going to pay for the next 10 years and have a diversified income. So I've got 100 tenants. If 5 of them don't pay, I can still pay my bond. If 10 of them don't pay, I can still pay my bond. If 30 to 40 of them don't pay, I can still pay the bond. It's ridiculous. In South Africa, if I've built a decent sized portfolio and I've managed to put down 20 to 30% deposits and I'm barely breaking even, maybe slightly positive, if 2 or 3 of them don't pay, I'm paying in every month. So I've got no positive cash flow, no buffer, and I have to pay in when things go wrong. In the US, I've got a positive cash flow, which is my buffer. So I'm collecting money, which is lowering my risk every month. I've got a diversified tenant portfolio. So if a few of them don't pay, it's not the end of the world. And if they don't pay, it eats into that buffer and I can still pay my bond. It's brilliant. Much lower risk than buying in South Africa. And what am I looking for as an investor? I'm looking for less headaches, less risk. How can I protect my money? The first rule that Warren Buffett says is don't lose capital. So if I can find a way for me to protect my money so that I don't lose my capital and I can lower my risk consistently with income. So if I've put in $3 million and I'm getting $300,000 a year or $350,000 a year, somewhere around there, each year from the 3 million, I've got 300,000, it's lowered my basis to 2.7 million. I've got another 300,000, I'm at 2.6 million. And rentals are escalating, so I'm also getting an increased rental every year. And I'm able to renovate it slightly to boost the rental income up front as well. So we're going to go from a 10 to a 16% cash on cash on that property in the second year. It's unbelievable. In South Africa, to get a 16% cash flow, you'd literally have to buy a great property and pay cash for it. You'd have no leverage effect, which means you're not really growing your wealth. If I can leverage my money in the US and just wait it out, so now I've got cash flow, and wait 10 to 15 years and pay that property down and own it completely, then I've built proper wealth. That's why I love buying in the USA. So my conviction is so great that I know I can help other people create a significant difference in their life by creating positive cash flow in great properties that have a very low risk profile with good tenants and a legal infrastructure that actually protects them. Imagine being a landlord where when the tenant doesn't pay, you can kick them out legally, quickly, and the law supports you. What a place. That's America, people. We don't have to continue buying in South Africa all the time and putting all of our eggs in one basket. I'm not saying don't buy here. I'm just saying logically it doesn't make any sense anymore to buy here at the current income yields, at the current interest rates, at the current price points. I mean, the price points we're paying here in Cape Town are ridiculous. We've got a development here that we're busy with. It's 13 units in Sea Point. And when I sell those properties, I can't believe the prices that people are going to pay. When I bought that property, well, bought it with some partners, I can't believe the price that we did pay for a really, really ugly, terrible property. Ugly in terms of, and terrible in terms of what it looked like, but now it's going to be beautiful because we're busy fixing it. The risk that we're taking on there, and I bought it with tenants in place that it's not that easy to get them out. We have to go about it completely legally. We can't do any funny business. I've heard a lot of stories about people changing doors and changing locks and moving people into the apartment alongside people. These are good people, man. These tenants are not bad people. We just want to make this place significantly better. So we're going to help the tenants to move out. We're going to pay them some of their money back. We're going to pay them their deposits. We're going to help them financially to be able to find other equivalent accommodation so that everybody wins. But in the US, I don't have to deal with bad tenants. When an eviction needs to happen in the places that we buy, I don't buy in rent-controlled areas. I don't buy in states where the laws aren't in line with protecting landlords. I buy in states where we are protected. I buy in states where the law supports us as landlords. Like Oklahoma City, for example. We bought quite a few houses over there. It's an amazing place. One, the tenants always pay on time. Our manager's amazing. He's able to deliver good quality tenants, install good quality tenants, manage the maintenance very, very effectively on a decent sized portfolio of single family homes, strangely enough. But he does charge. We're paying 8 to 10% in terms of 8 to 10% fee of the gross revenue. But basically the US, when I look at it, my conviction is very strong because I've analyzed it. I've physically done it myself. I've built a very big portfolio. I've helped other people do it. And I've seen the benefits of the differentiated thinking in investing in the US compared to investing in South Africa. And I'm just all in on the US. My belief system is strong, and I'm going to build $1 billion portfolio with or without anybody that wants to partner with me. And if I do achieve it, it's going to make a significant difference to everybody that came on board for the ride. So I hope you're one of them. If you aren't one of them, that's okay. Carry on. I hope this video was valuable for you. I hope you're buying property in the US anyway, whether it's with me or without me, that's okay. I do believe in it very strongly. If you are going to buy over there, look for good quality people. That's what makes property profitable. But people, it really is what makes things happen. So look for good quality people that actually have a great track record, that's built on experience, built on what they're actually going to do, and then design deals that work. Anyway, good luck and take care. And yes to our global financial freedom. Bye-bye.